Folks, thank you very much for your patience while we just sorted the camera and the sound out. So, what are we looking at today? Well, first off, we've got top left-hand chart, 240-minute chart on the pound-dollar, period of consolidation. Okay. Now, at this point, it's fairly easy to say that yes, pound-dollar is consolidating. But how do we know that price is consolidating? So I just want to backtrack slightly before we talk about how to trade in consolidations. Okay. So firstly, by identifying the price action sequence. So as price moves through this vertical line here, this point of the chart, assume for a moment the top's in real time. I appreciate we all of it with hindsight. So looking at the development of price activity, so up to this point here, the vertical line, price is still trending. Price is making lower high, lower lows. Very briefly starts to make a higher high, higher low, and higher high. Okay. Swing highs, just to remind ourselves, defined as a 3-bar combination, bars preceded and succeeded by lower bar highs or higher bar lows. So again, this has all been pre-recorded on a previous session with price action sequences. Just a quick reminder of it. So at this point of the chart, we've got lower high, lower low, lower high, higher low, higher high. Price goes above that higher swing high, then I'll have a new direction bias change to the upside. Now that doesn't happen and price continues making lower highs, lower lows. Okay, so another swing low there and a lower high. So this is where it starts to get interesting, just where the vertical line is right now. So at this point of the chart, we've got lower high, lower low, a slightly higher low there, and a lower high. So price is making basically higher lows and lower highs. I think it'd be fair to say that if we wait for this swing low here, it'd be fair to say that at this point of the chart, let's scroll back slightly, that point of the chart, price is making lower swing highs and higher, we've got two high swing lows in this case, high swing lows and lower highs within the previous swing high and the previous swing low. So at this point of the chart, price action is now telling me that price is range bound. Okay? If we want to put a more classical definition on this, again, if you're using trend lines to identify what phase of movement the market's in, then we can pretty much call it a triangle type pattern. Okay. So at this point of the chart, again, it doesn't matter really how we identify this, whether it be trend lines or price action sequence. What we do know is that this is the first point in time that this particular chart is consolidating. Okay? Is everyone with me on this? So let's just quick backtrack on the price action sequence. With price action sequence that we previously covered, price went from trending downwards into a sideways movement, price consolidating. So what I've marked off is the extreme boundary high and the extreme boundary low of this consolidation. This is the first point in time that price is consolidating, when price starts to make it lower highs and higher lows within previous swing highs and previous swing lows. So at this point of the chart, price isn't making new highs on the movement, and neither is it making new lows on the movement. Now, a secondary definition can be used as well. A more classically defined definition of a consolidation would be a multiple touch of the high and a multiple touch of the low. Now, I find the textbook definition of a consolidation, I find it quite vague, because most of them say allow X% deviation, and that allows you to take into account if price does exceed a previous swing high or exceed a previous swing low, or in this case, doesn't quite make it to the previous resistance of the swing high or the previous support of the swing low. So it allows for that deviation, or X% of the deviation. So we can view this as a more classically defined consolidation as well. Whichever way you look at it, from where the vertical line is, depending on what definition you look at, whether it be with trend lines, horizontal support and resistance, a more classical definition of a consolidation, or the price action sequence. Price is consolidating from where that vertical line is. That is where price is confirmed. So why is this important? Why is this important? To know what phase of movement the market is in. Firstly, it can dictate the way that we trade. Now, we've looked at trending strategies. We've looked at counter-trend strategies in the last few weeks. And we're going to look at basically ranging strategies. So if I know from where this vertical line is that price is consolidating, it's range bound. Again, we can put a multitude of different names on this pattern. And generally, I'm just going to call it a consolidation. And I've marked off the extreme boundary high and the extreme boundary low. So is everyone with me that, you can identify the consolidation? And we'll look at a strategy that can be utilized to trade a consolidation. I'm happy with that so far. So basically, identifying the phase of movement with the price action sequence. So far, we've identified that price is range bound. Right then, so let's start to put some structure on a strategy. Thinking about phase of movement, my high time frame is usually the 240-minute chart. And this is again dictating my direction. So from where the vertical line is, it is confirmed with the price action sequence that price is range bound. So if price is range bound, I'm not going to be keen on adopting trending strategies because, again, price is range bound. It would make more sense to adopt a range trading strategy. So if I know at this point of the chart that price is range bound, then I could adopt a range trading strategy. So classic range trading strategy involves selling resistance, buying support. Now on a breakout, assuming that price moves beyond the yellow line, the extreme boundary high, the extreme boundary low, I can then reapply and restart a trending strategy, initially looking for a breakout and movement above the resistance highs or below the support lows. For the moment, while price stays contained within the consolidation boundaries, the extreme boundary highs and lows, I can adopt a range trading strategy. So I'm looking to sell resistance, buy support. So what I'm looking at, what I'm just marking off here, this is a fib retracement tool. Now all I've done is I've customized this fib retracement tool and I've marked off the start and end points as my extreme boundary high and my extreme boundary low. Now remember that from the vertical line, that's where I'm saying that this is consolidating. So after that vertical line, I'll be considering range trading tactics. So I've also got marked off the 10%, 50% and 90% retracement level. So when I take my start and end points from the extreme boundary high and low, it marks off a 10% of the boundary high, a 10% boundary low, and we've obviously got the 50% level of the midpoint of the consolidation. So when price is range bound, I'm looking to sell resistance, buy support, buy the breakout through resistance, or sell the breakdown through support on a breakout. So until price breaks out, I'm looking for a range trading tactic: sell resistance and buy support. So what I'm saying is that when price gets to within 10%, so this is the condition for the rule. When price gets within 10%, I have looked at different percentage figures, 10, 15, and 20. I personally use 10%. If you want to use 15, use 15. It obviously keeps things a little bit more flexible for you. But at the moment, I've just got the 10% boundary levels knocked off. So what I'm saying is that when price gets within 10% of resistance highs, I can start saying that price is at resistance. Or when price gets within 10% of the boundary low, I can start saying that price is at support. When price gets within that zone, sell resistance, buy support. So that's my action level. Let me just mark that off a little bit more clearly for you. So when price is at resistance, within 10% of resistance high, or when price is within 10% of support low. I will then consider that price is at resistance or at support. More importantly, it's at a location of interest. Okay, location of interest. So from the vertical line, that's when prices I'm considering consolidating. If price gets to support or to resistance, I will then adopt a range trading tactic. So if price is within 10% of resistance high, I'm looking for one of two things. Firstly, a reversal off resistance or a reversal off support. If price breaks through resistance highs or through support lows, I'll be looking for a breakout. So everyone with me on this? So they're basically the definitions and the trigger levels to adopt a range trading tactic. Firstly, identify the phase of movement. Secondly, identify the boundary level that I'm going to adopt a range trading tactic. When price gets up to resistance or down to support, I'll be looking to sell resistance or buy support, depending on obviously where it gets. When price is within 10% of resistance highs or support lows, to be fair, unless I'm in a trade, I am not interested in what's going on. That really, the closer it is to the middle of the consolidation, then pretty much the more danger that I would consider, or the lower probability that price has of being a successful trade. Now, you obviously might get lucky from time to time, as price, to be fair, is looking like it's starting to make higher lows. We might see some upward movement, but the safest trading opportunity is at the boundary low or the boundary high. Sell resistance, buy support. So how do we do that? How do you think we should do that? If I'm looking for a reversal, is there a method of identifying a reversal that I'm already familiar with? Again, not deviating from anything that we don't already know with the price action sequence. Is there a method that I can look for that I can utilize to identify a trading opportunity? What do you think? You tell me. Anyone? That's what we've already covered so far today. That I've already mentioned. Bars, yeah, bars, price action. So if price is at resistance, I'm looking for a reversal. If price breaks through resistance, I'm looking for a breakout. Yeah, you could look for pin bars. Yeah, that's certainly one entry method. So we could look for a reversal bar. Yeah, reversal bar. I tend to class dojis, hammers, shooting stars, dark cloud cover, piercing line, all types of reversal bars. So I would include that in the pin bar category rather than just look for a shooting star, which is what most people, or a hammer, which is what most people refer to as a pin bar. That's certainly one particular entry method that could be used. So this would be a good location if you're trading reversal bars or pin bars, Pinocchio bars. This is a location that would be very useful for you to identify a location of interest for a pin bar. Now, to be fair, on the 240-minute chart, I don't see with my data, with your chart configuration, you might see something different. But on my data, I don't see reversal bars, a pin bar at resistance high or support low. It's not always going to develop. So how can you participate in this downward movement off resistance? Price is at resistance, it's a good location, you're waiting for a pin bar, it doesn't develop, so what do you do? Bias change, yeah. So price is at a location of interest. So now this takes you on to the next phase of the strategy. I've got two ways I can do this. Two ways I can do this. I can do this aggressively using a fast lower time frame. Now I use 89 tick chart as my lower time frame, my lowest time frame entry. That's about the same as a 2 or 3 minute chart. So what I'll do is, because most people don't have it, I'll just put a 2-minute chart on. Again, most people don't have the same type of chart configuration as it, which is fine. Let me just scroll back. So when price is at between 162.62 and 162.83, that's my 10% resistance high. And I can start to look for, firstly, aggressively, I can start to look for a bias change. So if I'm looking for a reversal, when's the first point in time that price will tell me it's going in the other direction? So firstly, I can do this on the lower time frames. Secondly, I can do this on a 15-minute chart, and I would call that a more conservative entry, because obviously you're waiting a little bit longer for price to tell you which way it's pointing. So two options: aggressive entry, conservative entry. When price is at resistance highs, I'm looking to sell resistance. I've then identified a location of interest, and I can start marking off the price action sequence of events. So initially that will start off in the upward trending price activity by marking off the last two swing highs, two swing lows. Okay? And what I'll start doing then is leapfrogging the swing highs and swing lows as they develop. Okay? So as each new swing high, swing low develops, I can leapfrog the swing highs and swing lows. And what I'm interested in is the last two swing highs and the last two swing lows. So what I've got is I can still say quite confidently that it's easy to say when price is trending, okay, when it's established. Price is trending, but when does this trend end and when is it going to turn around? Price is at a location of interest, it's at resistance. I'm looking for a short until price breaks out. So it's not broken through resistance highs, so I'm looking for a reversal off resistance. What I can see is high, higher low, higher high, higher low. Price is continuing to make higher highs. Let me just zoom in slightly a bit clearer. Price is continuing to make higher highs, higher lows. There's the lower swing high. So price now starting to turn around. It's failed to make a new high on the move. I've got higher low, higher high, higher low, lower high. All I'm looking for now is a lower swing low. So leapfrogging those two swing highs, two swing lows with the price action sequence, I've identified the first point in time that price is potentially starting to point down at a level of interest. So identify the phase of movement. Price is range bound. I'm looking to adopt a range trading tactic. Price is at resistance highs. My location of interest. Aggressive entry. Based purely on price action again. Looking at 2-minute charts, you should all be able to follow this through on your own chart. I've got high, higher low, lower high, lower swing low. Now with an aggressive entry, it might take 2 or 3 attempts to get this position again. Aggressive entry, I would consider it might take multiple attempts because you've got less confirmation on the chart. You've only really got price at resistance on the 240-minute chart and a bias change sequence on a lower time frame. A conservative entry can look for the same thing on the 15-minute chart with a bias change. Out of the 4 time frames I'm looking at, I'll have 3 out of the 4 time frames with the 15-minute bias change. At the moment, with an aggressive entry, I've only got the 240-minute chart at the location of interest and the lower time frame entry with the bias change pattern. So price now making with the price action sequence, we use this for direction. Which way is price pointing? Is it going up, down, sideways, or is it changing from up to down or down to up? Exactly the same pattern. Now I can use this rather than just to indicate direction. I can use this pattern to identify a trade setup. Price is at resistance. I'm looking to sell resistance. What's price doing on the lower time frames? High, higher low, lower swing high, lower swing low. The bias change sequence is what I refer to as. Other people might know it as a 1, 2, 3 pullback, 1, 2, 3 Russell, multi-point reversal. It's also trading the first pullback after the failure to make a new high, which is what this is. Got lots of different names. So for a trading point of view, rather than using this for direction, if price goes below the lower swing low, a new direction will be established on this time frame. I can use this for an entry. Lower swing low for me, 162.52. Typically I enter at least 2 points away below that, so 162.50. Stop loss goes past the highest point of the pattern. The pattern is the bias change. That to me would go above 162.76. The way that I do this is again +2 at least. Because I'm looking at a bid chart, I need to add the spread. And then typically my personal preference is to round up to a whole or a half number. I like to use 80, 85, 90, 95, double O's. It's just my personal preference. Entry at 62.50, stop loss at 62.85. Aggressive entry. When price gets into my location of interest, I can drop down to my lowest entry time frame and look for this price change sequence to trigger an aggressive short entry. The downside to an aggressive entry is obviously it might take 2 or 3 attempts to get positioned. The conservative entry, again, we don't know what happened, that's triggered. It doesn't hit the stop loss location before it starts to eventually roll over. So conservative entry, same deal. Same deal on the conservative entry. So with the aggressive entry, you can obviously get an earlier entry, try to risk control, but only got 2 time frames for confirmation. Location and the lower time frames pointing down. A conservative entry then. So before I go on to the conservative entry, everyone happy with the logic? Again, this is just, again, utilizing the price action sequence to identify a location of interest and a trade entry with the exact same price action sequence. Price is range bound, sell resistance, buy support. When price gets up to resistance high, I'm looking to sell resistance, and I can do that with the exact same price action sequence. So for lower time frames, I would consider an aggressive entry, very simply because I've got less confirmation. Looking for the exact same thing for a conservative entry. Okay. Now there's a couple of ways of playing this conservative entry. Firstly, I'm looking for the exact same pattern. Price making high, higher low, lower high, lower swing low. Now I can trade the bias change directly off the 15-minute chart, or I can drop down to the lower time frames to identify a lower time frame entry. Again, a couple of ways of playing this. So if I'm looking to sell resistance, buy support, aggressive entry, conservative entry, exact same pattern on the 15-minute chart. Now the 2-minute chart has already developed a bias change. So until price goes above the highest point of the bias change on the 2-minute chart, price is still in a downtrend. Now to be fair, on the 2-minute chart, price does go into a more classically defined consolidation. We don't know that's going to happen, but nevertheless, price at resistance, bias change identified, triggers, goes sideways into a more classically defined consolidation. And again, if you come into this slightly late on the trade, you can trade this consolidation as a breakout in the same way. Breakout pullback, looking for the first bar not to make it a new bar low. 15-minute entry, I would call a conservative entry. Again, only conservative entry because I've got more confirmation. Price at resistance, location identified, 2-minute chart already pointing down. 15-minute chart giving an indication that price is pointing down. High, high, low, lower, high, lower, low. I can trade the 15-minute chart directly if I so wish, or to try and look for a lower time frame entry from a risk point of view. If price goes below 162.48 on the 15-minute chart, then my 15-minute bias change is triggered and the direction is down. And we're then pointing down on 3 charts: 15, 2-minute chart, and 240-minute chart at resistance. So I've got 3 out of the 4 time frames that are used, all pointing down. So I've got more confirmation to point. So a couple of ways of trading the 15-minute bias change. Sorry, question from the room. Sometimes there's a last spike up. Sometimes the last spike up to take out the stops. Do you wait for that to happen or take it anyway? Personally, I'll take it anyway. The lower time frame entry of the 2-minute chart, we already know, because it's a fast time frame, it's the aggressive entry, it might take multiple attempts. So if price does spike up, you're looking for a re-entry, you're looking once again. So if this trade stops me out, price at, go through the routine, price at resistance, location good, 2-minute chart aggressive entry, or if price makes a new high in the move and stops out the 15-minute chart, I'm once again looking for a conservative entry to start the process all over again. So if the trade stops you out, don't think, oh, it stopped me out. One trade, oh, the end of the world's nigh. It might take a few attempts. Price is still at resistance. Price has stopped me out or the pattern voids, then restart the process. Price is resuming its uptrend. It's at resistance. I'm looking for an aggressive entry on a 2-minute chart or a 15-minute buy change. If that triggers me and stops me out, I'm looking for the same things again. As long as price is at resistance, I'll be looking for the bias change on the 2-minute chart and the 15-minute chart. Aggressive entry, conservative entry. It might take multiple attempts. You're not always going to get the trade on first time round. So a couple of ways of trading the 15-minute chart. Price is at resistance. Bias change on the 15-minute chart. The easy option is trade the 15-minute bias change. They're not always going to be this small. Not always going to be this small. You might see quite a wide-ranging bias change. The stop loss size could be quite big on a different chart with a different situation. So I can trade breakout pullback of the bias change. Now this is what I would refer to as a bias change breakout. So if price goes below 162.48, let's just mark it off on the 2-minute chart. So there's the lower point of the movement there. So that low point there on the 2-minute chart is the swing low on the 15-minute chart. So if price goes below that level, so for the conservative entry, a couple of ways of playing the conservative setup. Firstly, breakout pullback. So if price goes below the bias change low trigger, I can drop down to the lower time frame and look for breakout pullback setup. Obviously, to take it getting lower risk, it does mean that we've got one pullback entry just where the cursor is there. Breakout pullback. Pullback is the first bar not to make a new bar low. Stop loss goes past the highest point of the retracement after the pullback low is identified. That obviously triggers. Stops you out. It didn't stop you out on that spike up there. It would have stopped you out on the next move up. So, you've got breakout pullback. Now, if I'm looking to sell resistance, I can trade the bias change kind of like a breakout. I call it a bias change breakout and use a trigger level on the 15-minute the 15-minute bias change low. And very simply treat it like a breakout. And to be fair, on the lower time frames, we know there's a consolidation there, so you can treat it as breaking. Now, as price continues to rise and retrace, I'm looking for shorts. I'm now looking to sell rallies. Okay, price is at resistance, range reversal tactic. I'm looking to sell rallies. Again, a couple of ways of doing this. The first one is to break out or to break through the bias change low. The second one is to use fibs. So taking fibs from, if I'm looking to sell rallies off resistance, fibs from the high of the move down to the low of the move. Fib retracement setups being previously covered, pre-recorded. What are we looking for? For those people who are familiar with the strategy will know this already. I'm looking for a move up to at least the 50% retracement, followed by a close below the 38. In this case, I've got to move up to the 61, which is this lighter green line, move up to 61% retracement, and a bar to close below the 50. Let me just zoom in a little bit so we can see it's a little bit clearer. So taking the fibs from the high of the day down to the low of the movement, not the low of the day, obviously the low of the movement. So I can start to integrate and weave the other strategies to break out the fibs. We've already covered the breakout aspect. The first breakout trade didn't work out. As price retraces, I'm looking to sell rallies off resistance. So price is at resistance, the location is good. The direction on the 15-minute chart is down, the direction on the 2-minute chart is down. Price, depending on your entry, might have stopped you out. Or this could be an add-in trade. It's already moved. It's already moved there from the entry. Around about 40 pips, you might have cashed out some of your profits already. Or you could be looking to add in and compound into a movement of resistance. Fibs from the high of the day, in this case, down to the low of the movement. I'll put the fibs on the 15-minute chart at the same location. Fibs from the high, down to the low of the move. Move up to 61, close below the 50. Again, these rules are clearly outlined on the pre-recorded video for the fib retracement setup. Move up to the 61, close below the 50. The bar that closes below the 50 is the trigger bar for the entry. So entry below the trigger bar, 162.47. These 2 points go, takes me down to 162.45. Stop loss goes past the highest point of the retracement. I always place my stop past the event that caused me to get in the trade. So now we can utilize breakouts, fibs, within the context of price ranging overall on the 240-minute chart. Identify location of interest when price gets within 10% resistance highs, 10% resistance lows. I'm going to adopt a range trading tactic. Sell resistance, buy support. Initially, two options. Firstly, an aggressive entry, using the lower time frames to look for the first point in time that price changes direction using the price action sequence. We've already covered that. Conservative entry, I would call a 15-minute price change in exactly the same way. Two ways to trade that. Firstly, 15-minute buy change directly, using the lower swing low for the pattern and the high of the pattern for the stop loss location. Or if the risk is too big for you to accept, use the lower swing low of the bias change pattern on the 15-minute chart as a trigger level to take action. When price moves through that trigger level, kind of treat it like a breakout. Break down through support, trade the first pullback. In this case, that first pullback didn't work out, and a re-entry can be taken utilizing fibs. So we can then start to weave in all the other things that we know and love about trading price action, trading the breakouts, trading fibs, selling rallies, selling resistance, buying support, again within the context of price being range bound. And I'm not deviating from anything I'm doing. Selling resistance, I can trade breakouts and fibs, selling resistance. Obviously we know the outcome of this. Obviously we know the outcome. So for the moment, folks, any questions on that? And then we'll move on to the live chart. So very simple method. As always, identify the phase of movement. Which phase is the market moving in? From the vertical lines, we knew exactly what price was doing. Price was range bound. If price is range bound, sell resistance, buy support. How do we do that? More importantly, same price action sequence is used. Aggressive entry, conservative entry. And to be fair, you ultimately can utilize your favorite method. I use breakouts, I use fibs. If you then want to start using other methods, trendline breaks, you want to use that within the context, you're looking to sell resistance. Price is range bound, price is at resistance, sell resistance. You're looking for short. I would continue to look for short until price gets to the 50% of the consolidation that you've identified. When price gets there, I would consider price really in no man's land. At that point, I'm going to start managing the trade. So as price moves through 50% of the consolidation, I can then start to manage the trade. Again, whatever your favorite method is. Personally, I use, once again, the price action sequence. Identifying with the price action sequence the second previous swing high. Again, the trade management method has been previously covered, so I'm just going to gloss over it for the moment. Utilizing the second previous swing high to trail my stop loss down. Aiming for a target down at the lowest point of the consolidation. Looking basically for price to get back down to support. If price is ranging, a good chance it will get there. But if it doesn't get there, as price moves through 50% of the consolidation, I'm going to start managing my trade. How can we avoid false breakouts, Albert? If you ever find out, please let me know. You don't know they're going to happen. No one knows. All you can do is trade the chart. Trade the chart in real time. I don't know I'm going to be stopped out on a trade. I don't know if the trade's going to make me money. But what I do know is that if I follow rigid rule set over the long term and apply it consistently, I will make money. Price is range bound, sell resistance, buy support. How can we avoid false breakouts is the question. If you find the answer, you can sell that, you'll make a fortune. No one knows the answer. Right, okay, so the live chart then, live chart. How would I assess this right now with a new trading opportunity? That's obviously what's on most people's minds. We've looked at the theory, we've seen it in action. Look back across the chart, don't take my word for it. This is obviously the most recent example that we've been through. Take a look on the other charts. There are plenty of examples. Prices doing similar patterns and forming similar patterns on many other cross rates at the moment. So right now, in real time, what would I be looking for? Right now, no trade on. What am I looking for? I'm looking for, very simply, price to be at support or at resistance. So you tell me, is price at support or within 10% of support, these blue boxes, or at resistance? Is it in that 10% boundary? Yes or no? Is it at that 10% boundary? So price, I'm saying then that price is not yet at support. There may be support on the chart, but price is not at the support level I'm interested in. So what do you think? Trade or no trade? No trade, absolutely. So right now, price is not at support yet. There might be support because quite clearly price is going sideways. Price might be developing a new support, but price is not at the support level I'm interested in. Neither is it at resistance. So new trading opportunities, the strategy is saying wait. Price is not at support, it's not at resistance. Wait for price to be at support or at resistance before adopting a range trading tactic. My other option right now, again, let's not forget that price can break out. It's not going to remain consolidating forever. It can obviously consolidate for long periods of time. What if then price breaks down through support or up through resistance? I will then be looking for a breakout in the usual way, breakout pullback. But right now on this chart, price is range bound, the wait situation. I would say it's Friday. If you're only looking at the pound dollar, it's Friday. I don't think anything's going to develop soon. I wouldn't plan on holding over the weekend at the moment. I would say take the rest of the day off. If you would just look at the pound dollar, and I was looking at this right now, which I am, I would say there's nothing setting up. Price is not at support, it's not at resistance. I will reassess this on Monday as a new trading opportunity might develop then. But right now, it's a wait situation. Go and do something else. Can I talk about my new strategy? Do we have time? Admin, if you can let me know. Strategy Furquhart. It's a strategy that allows me to trade overnight movements. It allows me to trade smaller fluctuations in price. It allows me to not worry about whether price is trending or price is ranging. And the objective of Furquhart strategy is to try and identify the main move or the main moves for the week, or the main move or main moves over a 4-hour time period. I'm basically with this strategy looking for the flow of money. I'm looking to jump on the shirt tails of movement. Again, due to the strategy's nature, you don't have to worry about identifying what phase of movement the market is in. You don't need to worry about whether price is ranging, trending, sideways, whether there's a wolf wave, whether there's a 5-wave correction, or there's a 3-wave correction. You don't have to worry about standard technical analysis. It's non-conventional. It's very simple. There's 4 rules to it, with 2 rules with 1 time frame. The swing trade, the overnight trade, and the shorter term, you've got 4 rules. There's not a great deal of thinking involved. It's a very mechanical rule set. I think that summarizes it up. It's very simply put, it's more pips with considerably less work. It allows me to trade without being at the screen all day long. It allows me to participate in overnight movements without being up at 2 o'clock in the morning. It's basically good all-round strategy. So that's what the Furquhart strategy is. Do I have time to go through it? No. So folks, any questions on range trading tactics? Identify the phase of movement with a range trading tactic. Identify the phase of movement. If it's range bound, sell resistance, buy support. If price moves beyond extreme boundary highs and lows, we can look for breakouts. Breakout through the high, breakout through the low, trading the first pullback. Any final questions, folks? Any final questions? Rob, I'm sure the admin will post the link up as soon as it's done. But it's usually in the transcript section of the website. If you go to my biography page, there's usually a link of previous recordings there, so keep an eye on that over the next couple of days. That should provide the link for you. Right then, folks, if there's no final questions, I would say that pound dollar is a weight situation. It's not at support, not at resistance. You've got a nice range trading strategy that can be used based purely on price action. Thank you very much for your time. My name is Philip Newton. You've been fantastic. And whatever you're up to this weekend, have a fantastic weekend.